2 days ago, Bitcoin hit $81,265 and got slapped down, almost to the dollar. At a line it hasn't closed above in months. And my whole feed is calling the new bull market. Supercycle threats, you're not bullish enough. I think people are getting too comfortable because I pulled the receipts exactly on this rally, where the money actually came from, and half of it is not what you think it is. So here's the deal. I will show you exactly why crypto pumped 23% in a single week. Why this could be a trap. The strongest evidence that I'm wrong. Yes, that's part in there too. And to 2 dates in September that will settle it. And then I will tell you how I'm handling my own money, which right now is mostly not chasing. Let me show you why. Start with why it pumped, because almost nobody gets this right. August 19th, the US Treasury publishes a technical notice. They're doubling down their buybacks of long-dated government bonds. Sounds enormous. Here's the actual number, from $2 billion to $4 billion per operation in a roughly $28 trillion market. That is not a liquidity regime change. That's a rounding error with a press release. But crypto didn't trade the number, it traded the headline once again. Money printers back. And that's the headline on a market that after months of grinding through a bear was loaded with people betting on more downside. How do we know it was loaded? Because of what happened next. The headline hits, the price ticks up, the shorts start dying, and it cascades. $1.37 billion of Bitcoin shorts position liquidated in a single day. Per CoinGlass, the biggest one-day wipeout of Bitcoin shorts ever recorded. Nearly double the old record from 2021. Close to 3 billion across all of crypto in about 2 days. 160,000 traders gone. Bitcoin plus 10% in 24 hours, plus 23% on the week. The best week since the election pump of 2024. So why did it pump? Because a market full of trapped bears met a misread headline. That's not a demand, that's detonation. Now, a squeeze can start a real rally. Squeezes light the match, so I went looking for the actual buyers. And this is where it gets uncomfortable. Receipt 1, the Coinbase premium. When Americans genuinely want Bitcoin, they pay up on Coinbase. And it trades slightly above the world price. CryptoQuant's index has that premium negative for 97 consecutive days as of the last reading, the strongest discount streak on record. Though, through this entire pump, American buyers never paid up. Receipt 2, open interest. The total pile of future bets sits on the table. If new bulls were piling in, that pile would be growing. Instead, it collapsed to a 5-month low, down almost 60,000 Bitcoin during the rally. That's old bets closing, not new bulls arriving. Receipt 3, where the volume is. The casino side of crypto, perpetual futures, just did the record volume in August. Actual spot buying volume shrank the month before. This rally is being traded, not bought. Receipt 4. Sideline cash isn't growing. Stablecoins, crypto's waiting room money, up barely 1% on the month per DeFiLlama. Tether actually shrank. Receipt 5, and this one stings. The biggest corporate Bitcoin holder on the planet, Strategy. Michael Saylor's company, the company's own SEC filings show it sold 1,638 Bitcoin in one reporting week. Another 1,690 the next, both near the lows around $64,000, and the filing since, no purchases, none. To be clear, that's the company reported treasury moves, not Saylor's personal wallet, but the company is the whale. And the macro. Everyone's trading, easy money is back. While the actual question at the Fed September meeting is whether to hike as of yesterday's inflation data, markets priced that at roughly 40%. Core inflation is still sitting at 3.3, miles above target. That is not a bull market weather. And even the charts say prove it. Rejected at the 50-week moving average, the long-term trend line 81,085, almost to the dollar. Why might this be a trap? Because underneath the fireworks, the people who would have to fund a real bull market are sitting on their hands. Okay, and now the part most YouTubers skip. The strongest reason I could be wrong, the ETFs. Spot Bitcoin ETFs. The regulated funds where big money buys have taken in cash for 8 straight trading days. $3.3 billion in August, per Farsight daily numbers. Best week of 2026. And here's the part I cannot wave away. The money kept coming after the squeeze ended, almost 900 million in the last 3 days of data. With the price stalling, short covering cannot explain that. That is real money making a real decision at these prices. And the fresh CoinDesk analysis out today backs it up. Order book depth stayed high through the entire move. Real size absorbing these prices, not a thin market getting pushed around. And look at the shape of things now. The leverage got flushed out. Funding is back to normal. And that is not what a top is made of. Tops come in with euphoric retail, and retail is nowhere to be found. Buy Bitcoin searches on Google near 1 year low. Analysts at K33 say this looks less like a blow-off and more like how the bear market ends. 4 key trend lines reclaimed in 4 days, faster than any cycles they've ever measured. So the honest bull case is brutal for my thesis. Squeezes start rallies and quiet institutional money sustains them. Exactly like this. If I'm wrong, this is how I'm wrong, and I'd rather show it to you than quietly delete this video in October, like half of the platform would. So which is it? Here's what nobody on either side admits. The answer has dates. September 15th, the United States Senate takes its first procedural vote on the Clarity Act, the law that finally decides how crypto is regulated in America. It already passed the House by a huge bipartisan margin. Trump wants it on the desk next month, but it needs 60 votes in the Senate. There's an unresolved ethics fight. And this rally has already partially paid for a yes. September 16th, the Fed announces its decision, hold or the first hike of this cycle. 2 events, 48 hours. Instead of a prediction, here's exactly what would change my mind. If Bitcoin closes a week above 81,000 through that 50-week line with ETF money still flowing and that Coinbase discount finally flipping positive, the trap thesis is dead. The combination is real demand doing something a squeeze cannot fake. If instead the ETF flows dry up and we lose 70,000, trap confirmed. And the data says the next stop is 60 to 70 within the August floor, near 63 below that. Everything in between, noise, and you don't pay for the noise. So how do I think about capital under that uncertainty? Straight answer, I'm not chasing it. Not at 79,000 after a 23% squeeze week into rejection, 2 weeks before the answer. Look at the asymmetry. From here up to confirmed breakout, about 3%. From here down to the first real support, 11. I will happily pay these 3% to know the answer. That is not fear, that's buying information. So I'm waiting for the confirmation before putting new money onto this move. If you're a boring monthly DCA person, honestly, none of this is about you. Your plan doesn't care about my trap. This is about new money today at this price. One more thing, because this channel is AI and money, everyone watches AI tokens for this story. I'm watching something quieter. Bitcoin miners turning into AI landlords. Riot just signed the long-term data center deal linked to Anthropic. Hive closed $350 million AI cloud contract. That's the theme I'm watching most closely long term. And it doesn't need this rally to be real. That's the next video. None of this is financial advice. I'm showing you my reasoning so you can build your own. September 16th, the market answers, and I will break down what it means the moment it lands. If you want that breakdown, subscribe. See you at the verdict.